Hey, welcome back, everybody, to another episode of the Nonprofit Show. We're really excited to have this conversation today. And it's really tough for some folks, but it's getting a banker on your team. Jeff Young, Senior Vice President at First Bank, is somebody that I met while serving on a panel at Innovate 2025 from his base of operations, if you will, in Nashville a couple weeks ago. Welcome, Jeff. We're excited to chat with you today.
Thank you for having me. I'm excited to be a part of the conversation.
You know, Miko Marquette Whitlock, you and I were joking around in the green room about getting free money from the banker, trying to get these things going. And so this is going to be fun to talk about how and why and when you need a banker. And so we're really excited to dig into this. You know, we have bankers, if you will, that support us, and those really are our presenting sponsors. I'm going to just lay it out there. And they include Bloomerang, American Nonprofit Academy, Staffing Boutique, JMT Consulting, Interim Executives Academy, and Your Part-Time Controller, along with Fundraisers Friday, our new episodes on Fridays just dedicated to those that fundraise for nonprofits. I'm Julia C. Patrick, CEO of the American Nonprofit Academy, joined by the intrepid Miko Marquette Whitlock, mindful techie. He is a mindful person and a techie. It's like the most beautiful marriage, and I'm thrilled that he is here today with us. Jeff Young, Senior Vice President, First Bank and Commercial Banking. You know, when you and I were chatting, we were talking about the people that are the most important ones in your bank, in your boat. And I said, you know, a CEO, a strong board chair, an accountant, an attorney, and I started to say the B word, banker, and you said doctor, and I said, well, banker first and then doctor. So I don't know if you remember that, but yeah, I'm thrilled you're here. Thank you.
I'm excited to be here. Thank you very much for this opportunity. And I think this is a very important topic that a lot of people should know more about. So excited to take part in the conversation.
Yeah, really fun, really fun. Well, Miko, I'm going to let you kind of start us off. How about that?
Absolutely. So I think, Jeff, when many of us think about banks, we think about, okay, checking, savings, car loan. But in the context of, our nonprofits, is that the same, or is it different? Like what are the things that a bank can offer to a nonprofit that may be unique from what we typically think of?
Sure. Well, first off, I think that most nonprofits need to acknowledge or realize their value to most banks. Nonprofits are a desirable client base for any bank. Good banks want to do good for their communities. And what better way to do that than support the organization that actually have boots on the ground within the communities that they serve? So some banks offer checking accounts and savings account products that are specifically geared for nonprofits organizations. And these accounts come with preferred rates on savings accounts, discounted fees for the checking account. You just have to ask. And one other real important piece to this is banks are also incentivized to work with nonprofits. Not many people realize that. It's actually viewed favorably by regulators that look and assess banks. There's a Community Reinvestment Act was a federal law that was enacted back in 1977. And not to bore you all with the details, but it actually encourages banks to help meet the needs, the credit needs of the communities that they serve. So it's pretty broad. But when you break that down, there's some subjectivity to that analysis and the ratings that the banks end up getting. Each bank has actually got a ranking scale on their CRA rating. And lending is a major component to that. But they also review how much the bank has done in donations. What kind of deposit clients do they have? What's the volunteer hours look like for their employees? The CRA ratings are then considered and this is why it's important, when a bank is looking to merge or open up a new office or acquire another bank. That rating can make or break whether or not a bank expands. And so it's an accountability tool. Some regulations are a little cumbersome and burdened. I think this is one that has stood the test of time and been a very good thing for the communities that it's been in place. And so there's incentives for the bank to do this. And you'll see that there's products and services that some banks have that are geared specifically to nonprofits. And the whole mindset of that is how do we help the nonprofits keep more money in their pocket? So it's reduced fees. And then the other piece to that is access to capital so that they can
Mhm.
continue to meet challenges and grow, expand, and whatnot. So that's it kind of in a nutshell.
So it sounds like products and services, right? So like the basic checking or the preferred rate around that, and also the lending opportunities. But I also heard you say donations and volunteers as well. Did I hear that correctly?
That's exactly right. And most banks are more inclined to do that if you have a relationship with them. And
Hmm.
so, if you just come to a bank and say, we are looking for donations for X, Y, or Z, they're much more inclined to participate if you're already an existing client of the bank. And that kind of just goes with it. And also, too, when you're looking for the bank to work for, the right bank, you've got banks of all shapes and sizes. You've even got credit unions. There's some variables that you want to consider with that as well, because the larger the institution, tend to have more products and services available, more capability potentially on the IT standpoint. Like the online banking is a little more glamorous. I think where big banks can struggle sometimes is as they grow in size, they tend to get a little more muscle bound and a little impersonal. They
Hmm.
also experience staff turnover at a higher rate, so your point of contact can sometimes change. And then they are a for-profit entity, banks are. So
Hmm.
what ends up happening is sometimes they'll put more focus on their bigger nonprofit clients. They get all the attention, and the smaller folks oftentimes get overlooked, unfortunately. But the
Sure.
bigger point is donations, volunteerism. When you invest in the bank, having your accounts there, that should be the trade-off, or not a trade-off, but it is an incentive back to the organization for working with that bank.
One of the things that I was thinking as you were chatting, is that you have to be good at asking questions, because this isn't going to be something that you walk in and they're the typical banking brochures, right? I mean,
That's right.
you have to find the right person. I know a lot of larger banks actually have divisions or leaders, section leaders that just deal with nonprofit banking relationships. But if you don't kind of explore that, you're not going to necessarily know what's available, right? Is that
Uh,
fair to say?
I would say that's a fair statement. Some some banks will be public and broadcast out that they do have nonprofit checking accounts or preferred rates on savings accounts that's specific to nonprofits, and that tends to be along with the size of the institution. So some of your smaller banks may not broadcast that out, or they may not have a marketing budget to promote those products and services, but they do exist, and every bank in the country wants to be more aggressive in working with nonprofits, and so those products do exist. You just have to ask. You're right.
I love
So
it.
can I ask on this point? Is that okay? So
Sure.
Jeff, I'm curious, for someone that's listening to this and they're like, okay, well, I want to take this information and I want to go to my bank. What are the top maybe two questions they should be asking their banker based on this conversation right now?
Sure. I would say, do you have experience in working with nonprofit organizations of a similar size to my organization? And then ask, what products and services that they offer that would be aligned with what we're doing. I take it one step further, because I think it's easy to be a banker for a nonprofit. It's another thing to really have a passion for the mission. So finding someone that's got a heart for the organization, I mean, that's just an added bonus, because what you get with that is potential advocacy internally at the bank, and that is where the relationship really can show its colors and thrive for the organization. Is any banker can do business with any client when times are great, but when there's a downturn or there's uncertainty, you really want someone who understands the mission, has gotten in the trenches, maybe even gone out for a site visit or met the board, and they can be an advocate internally at the bank. So questions I'd ask: do you have experience in serving nonprofits or working with them? And what are the products and services that you offer that could be tailored for my organization? And then from that, you find out, okay, is this person truly passionate? Do they understand the mission and the work that we do? And if you can get them on the love train, it's a really great relationship because they can advocate for you internally at the bank.
Miko, that's a great question, because it prepares that person that might be intimidated by establishing a banking relationship to kind of figure out where to go and how to navigate this, and hopefully, quote unquote, interview more than one institution and not just, walk through the door and get signed up. And that leads me to this next part of our conversation is, should your banker automatically be elected to the nonprofit board? And I want to spend some time with this because this can be a little dicey, but yet it can be a great benefit as well. I mean, I think these institutions know what's going on. They have an ability to bring other stakeholders in. So, Jeff, what does this look like to you in terms of board activity and board leadership?
Sure, that's a great question. And you want to make sure that there is a fine line between the work that you do and the incentives that may be given. I mean, most banks do offer bonus pay based on production. And the last thing you want to be doing is self-serving by being on a board purposefully. And so I would say it's good to have a banker on your board, because just like, you would think about, hey, it's great to have an attorney, it's great to have an accountant, it's great to have insurance, or just all these various services. I would say the banker comes at it through a certain prism and lens, and that could be tilted more towards the risk management side. Bankers love to poke holes in things. And so I think that having a banker on your board is great. The banker that you directly work with, that is a fuzzy area, and you want to be careful of that. So for instance, if you're an organization that's needing to borrow money, a good banker will probably hand that off to another team member to run, so that there's objectivity to that process. I just think that's good business in general, just to make sure that there's no incentives for anything negative to take place. But so yeah, I think on the deposit side all day long, that's great. The thing you want to be mindful of there is if there's preferred rates are way higher than market on the deposit side, that's another area. So it can be for both lending and deposits. I've found that if it's anything like that, just hand it off to another banker on your team. And most bankers have that capability to do that.
So Jeff, on this point, I guess I want to take a step back. I've served on a number of nonprofit boards, and in my experience, there aren't a lot of folks that I would say that have a high level of financial literacy when it comes to managing finances at an organizational level. And so I'm curious if maybe you could take a step back and maybe explain the distinction between maybe a banker and an accountant and a CPA and someone who's in investments, so
Sure.
that we can understand a bit more about why it's important to maybe have this extra voice in the room.
Sure. I think about just definitionally, accounting by its nature is interpreting past results to then give you kind of a snapshot of what the future should look like. Finance and banking is more forward looking. So when you look at a CPA being on your board, they're probably going to be great at helping with the 990 preparation and the taxes and the structure of entities to see if that's aligned with IRS regulations. I would view a banker on your board as more of the growth side of the house, someone who can poke holes in decisions that are being made from a risk standpoint. Like, do we need to purchase a building as opposed to rent? A good banker should be able to do that analysis for you to determine if that's a good fit. So accountants are great, and they serve a purpose. I would view the banker as more of a forward-thinking, growth-oriented person on your board. And then you asked a question about someone who deals with just investments. They're great as well, and there's really talented CFPs if they've got that designation. They will know a little bit about all of those topics: accounting, banking, finance, all that. They tend to be geared more towards how do we maintain the investment account to sustain the mission? How are our investments placed in the right investments, so that we have the dividends, or we have the growth that we need for the funds that we already have in hand. So that's kind of the the distinguishing pieces between those three individuals, I would say.
So, and I guess maybe to wrap this up, I imagine that for a lot of organizations that are already operating, that they already have some kind of product lineup with a bank of some sort or credit union. So where does one start if your relationship so far has just been, you have a place where you dump your money, but you don't have a relationship with someone actually at the bank? How do you start that relationship, and how do you get to a place where you can actually ask someone to serve on the board?
Yeah, I think that's a very good question. I would say that if you have a relationship with the entity, the bank or the credit union, I would say you don't really have a relationship. It's more of just a transactional arrangement. I would say the first place to start would be to visit your local branch. If you've got a relationship with a teller, maybe ask to speak with a branch manager. And then from that branch manager conversation, you ask, hey, does the bank have a department or a vertical internally that focuses on nonprofits? Because I really would love to find someone that can give us, a higher level of strategic guidance and advice to help our organization. So that would be kind of door number one. And then when you think about potential board members, I think LinkedIn is a great option to go out and look at. You can do a search for bankers that's geographically coded to your area, and then you can look too to see how many nonprofits does this banker serve on their boards. Now there's capacity issues with that, so there's some people that's like, look, 5 boards I'm not serving on anymore. But I think through the conversations with the branch and maybe getting plugged in with a nonprofit banker at that bank, you can find out, okay, is this someone that can get behind the mission, can understand what we're trying to accomplish? Do they have a heart for what we're doing to the point where they would be willing to roll up their sleeves and help support us? A lot of the bankers are probably going to look at it more from all right, well, this may be a great deposit and lending opportunity for me. But what you're really trying to do is get them on board with the mission so that they know what your organization is doing. Because again, that just plays into the advocacy internally at the bank, the storytelling that the bankers need to do when it comes time to borrow money or to get pricing adjustments or fees reduced. You really want someone that knows the organization. And so I would say start with the branch, maybe expand out to LinkedIn if you're running into some dead ends there, and try to find people that you see have a demonstrated ability to be active in the community.
Yeah. And I also think you need to look at your board members, because I think that, there are board members that are active in commerce who are going to have strong relationships with their bankers and to be able to kind of know how that syncs up with your organization or make those introductions. That's a great point. Yeah, thank you. And I think those board members also, a lot of times they have a lot of sway with that other type of leadership, because I know that within the banking community, there are higher level decision makers within a bank that will get placed with the top, marquee prestige organizations, and then lower level bankers that will get put with, I don't want to say strappy, but scrappy, and like the ones that aren't as the marquee,
or maybe not as well known,
Right.
Yeah.
Right.
Yeah. And I think that's
I think that's a fair statement. Yeah, I would agree with that. But you're exactly right. Leverage the board. I mean, if there's already a financial advisor that's on the board or an accountant that's already on the board, chances are they know a good banker that's in market, and they could do a great job of selling the story on the nonprofit. That's how I've got on the board of several nonprofits in town. It was a referral from another board member that was active, and I knew and respected the individuals that were asking me, and they had a passion for it. And the more that I understood what was going on, I was like, I can see where this is doing good, and I would love to, take some of my time and invest.
Yeah, I love it. I think that's great. Well, let's talk. We don't have a lot of time left, but let's talk about this thing that you mentioned about the banking relationship and that fiduciary trust, serving the bank, the employer, serving the as a volunteer, the mission of the nonprofit. The COI, the conflict of interest policy, is such a big deal, such a big deal. How do we know where that banker lives in that relationship? Whether you're banking with that, you have a banker on your board, whether you're with their institution or not. What does that look like, Jeff, or what should we be thinking about?
Yeah, I want to make sure I understand the question correctly. You really want to follow the incentive track. And as I mentioned earlier, most bankers are paid a bonus or an incentive based on production. And so if the banker is joining boards and the whole purpose behind that is just to get more business into the bank that's then coded to that banker, that's a no-no. And that's
Okay.
that's not good. And that's frowned upon internally at the bank, obviously. But the good banker will view it as a volunteer effort from them where they are bringing their talents and their skill sets from their W-2 gig, their daily job, and they're bringing that in and saying, I'm here to help. I want to roll up my sleeves and provide strategic guidance on the budget, decision making, help collaborate and make connections in the community to help advance the mission. So that's really what the banker's role should be on the board. Can they help and advise on banking related services? All day long. In fact, I love doing that. I sit on the board of a nonprofit here in town, and we went out shopping for the best rate on a term loan for a piece of property. And I actually got a chance to sit on the other side of the table and beat up the banks to make sure that they were giving the nonprofit the best deal possible. So it was kind of fun. But I think it should be where that banker hands it off to another banker within their organization. It's the way that should take place. And so is there a direct language in conflict of interest documents that speak to nonprofits? I don't know, but I do know if it's self-serving, it crosses that line. And that's really where you want to be careful. And so you can support the bank, but just don't support yourself is probably the best way to put that.
Yeah. And I would say even beyond bankers, I think best practice, and Julie, you know this probably as, your expertise with managing boards as well, this is universal across all board members in terms of the conflict of interest agreements. It should be a best practice there. I'm wondering though, as we wrap up, Jeff, you've mentioned banker singular throughout this conversation. And I've worked with organizations where, given the size, they have assets at multiple financial institutions, including multiple different banks. So I'm curious if you have any advice for organizations that are thinking about risk, or maybe thinking about, well, maybe they're not able to find a singular institution that's offering everything they need, and so maybe they're spreading out assets across institutions. I'm wondering if you have any thoughts about that.
Yeah, I think that's a good strategic play to mitigate, the risk associated with it. In these days, you may be talking on the deposit side of the house, FDIC coverage right now. There are certain programs that are out there. One that comes to mind is the ICS program. You also have CEDARS, which is specific for time deposits and CDs. Those are really good if you have excess deposits that are over the FDIC limit. So there's ways that you can keep your relationship intact at one institution if it's just a deposit situation. If it's more of a question of the bank's capabilities or the bank's ability to donate at a higher level, that's really where you kind of want to look at the size of the institution that you're working with. I mean, if you're banking with a Bank of America or JP Morgan, they've got a lot more resources than Community Bank XYZ down the road, right? So you want to kind of weigh those out. On the flip side, the true personal relationships and the great connectivity can take place at those smaller banks. And so I tend to think that it depends on your model, the organization's model, and where you're located geographically. That should drive that. I don't like the idea of multiple banks when it comes to the credit side. I think most banks should be able to handle that. If it's a small organization, maybe there are some legal lending limits that they're up against, but most banks should be able to handle a lot of what the nonprofits are after. And so you can stay put with one or two. If it's a deposit concern, just know that there are things out there that can help alleviate that, so that you can work with one institution if you can.
Yeah, great. Well, this has been an amazing conversation. I've really enjoyed it. Jeff, you've brought so many things forward that I think a lot of us have fear with, and then we don't engage with these potential relationships until we have a problem. And then that's tough for everyone. And if we can start out, on the, as we say, at the top of the mountain versus the valley, in establishing some of these things, I think that's a much better way to go. And
That's
so
right.
Jeff Young, Senior Vice President, First Bank Commercial Banking. You can learn more about First Bank at firstbankonline.com. Jeff, this has been great. I have to say, I'm so appreciative that you are out in the community. As I mentioned, I was really fortunate to sit on a panel with you, and I loved your comments. I thought they were spot on, as they were today. So thank you for joining the Nonprofit Show today.
Thank you for having me.
It's been a lot of fun. Okay, Miko, you ready to go back out and start, meeting new bankers and get going?
Well, I'm happy to meet Jeff, and I'm waiting for the check.
That's what, yeah, we're always waiting for that. Oh my gosh. Well, that's been really fun. We have amazing partners here that serve us, and they include Bloomerang, American Nonprofit Academy, Staffing Boutique, JMT Consulting, Interim Executives Academy, Your Part-Time Controller, and Fundraisers Friday. These are the folks that are with us day in and day out. They're in our boat, as we like to say. And as we end each and every episode of the Nonprofit Show, we want to say this: to stay well so you can do well. Thanks, everyone.